I went to Bloomberg yesterday and this was the situation. And we discussed that there is bubbles everywhere, private equity, AI, there is fears of recession, interest rates going up and down, tariffs, this and that, huge uncertainty, even now for wine. How are we going to do with our wine? Ray Dalio is warning us, trade wars unfolding, just a week ago, coming debt crisis in the US. And now, my fellow investors, what to do? Well, the answer always, when it comes to long-term wealth, compounding no matter what, is always value investing. I have been value investing since 2002, did greatly, not even comparable to the market, and will keep doing that no matter what the market does, because value investing is different that put your money in stocks because stocks always go up. That might not be always the case. And that's exactly what I want to discuss here, a lifelong investing process, a mindset that makes all the difference. Because you can look at the news, the Nasdaq is down 1% yesterday, 12% over the last few weeks. Perhaps it might be even 50% down in the next 6 months, you never know. The key factor for value investing is that whenever the stock market goes up or down, we go, meh, because it is the ownership of businesses that gives you the investing rewards. The ownership gives you the rewards through dividends, to growth of the business, to more ownership of other businesses, and that is what leads you to your financial goals. Because this is a wonderful chart. These are the total returns, 10-year rolling returns compared to valuation. So the black line is the returns over the last 10 years, and the gray line is the valuation, the cyclically adjusted price-earnings ratio. And you can see here, if we start from the roaring 20s, the P ratio was around 5. Great period for stocks, 20% per year returns till 1929. But then, fast forward 10 years, and that was a negative real return. Again, 0 here. Some positive, but again that positive came from when the valuation was very cheap. Whenever the valuation was expensive, you can see that the subsequent 10-year returns, expensive valuation, negative returns. Expensive valuation, 1, 2, 3. We'll see if history repeats itself 4 times. Again, negative real returns. So when it comes to investing, yes, you can enjoy these rides and everyone is screaming, invest, invest, buy the dip, stocks only go up. But these guys likely forget all these downturns of the stock market when it looks very, very ugly. And guess what? Price paid for whatever investment is the key factor determining your long-term returns. To overuse Buffett's quote, price is what you pay, value is what you get, and that's as simply as it is. From real estate, profit is made when you are buying. Similar equally to value investing, profit is made when you buy the business. Not I'm buying stocks hoping that those will go up. Because as we have seen, stocks might not go up for 10 years and then it is ugly if you are not rewarded from the business. For example, one of the stocks that I have been discussing that is part of my diversified portfolio is Archer Daniels Midland. The dividend yield is 4.34%, the P ratio is 12. It's a food business, it will likely grow over the long term. Over the next 10 years, the dividend will likely be higher. They have been increasing the dividend for 51 years now, so that is a good trend, I think. You will likely eat next month, despite the AI technological developments. So that's something that is there, most likely, and you can put it into your portfolio. If you have 20 businesses like that, you have a great long-term compounding business machine. And that's the key. If you buy value at the right price, you know you will get to a return. The rest doesn't matter. Only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. If the market shut down for 10 years, I would not be happy with a 1.3 dividend yield from the S&P 500. Because whenever the dividend yield was that low, well, returns were even lower for the next 10 years. What we have to focus is on constant compounding. And I do that by following 20, 30, even more, but 30 businesses closely. This is my value investment potential list. From this list, I then put the key factors in my own personal portfolio. A little bit more diversified is the model portfolio, and then even more diversified is the diversified research platform portfolio for those who like to have 15 to 20 positions. And one of the companies that I recently updated on is Amsterdam Commodities. And this is a food trading commodity, so they trade, source food, sell it to others. And then there is the stock price, but there is the business. Imagine if I owned 100% of the business. Now the market cap is 600 million and there is a 30 million dividend. I would be getting 30 million in my pocket every year, most likely. Bad years 20, good years 40 million. Would I care about whatever is said in the news? Most likely not. Similarly, also going back to Archer Daniel Midland's, another food company, and let's say I invest now $2,350. The dividend is $2 per share, so I would be getting $102 per share for my 50 shares of ADM. So that's the situation, the stock price. And now I have created a little table to show you how value investing works no matter what. The price is now 47, we have bought 50 stocks. This is the dividend, this is the dividend income, and each year I can buy at this price some new stocks. Next year I already have more, and so for the next 10 years I already have 50% more stocks in my portfolio thanks to the reinvesting of the dividend. Here I assumed 2% dividend growth. By the end of year 10, we already have increased 80% the income I'm getting from the business now. So 50% more shares, 80% income growth thanks to the new shares invested and the growth there. If the stock price stays flat, I start with 2,350, I end with 3,500. That is not a bad return. And why it's not a bad return? Because it will likely happen with a very high degree of certainty. If you have 15 businesses like this, of course 2 will go bankrupt, 10 will do this, and 3 will do much better to cover even those bankrupt losses. So whatever happens with the market, even if it's closed, you do well. That's the core essence of value investing. And then again, growing and slowly and steadily. I know it is boring, it is like watching paint dry, but you don't have to focus on this. You can focus on your career, your family, your kids, your spouse, traveling, whatever, and you let the businesses you own deliver your value. And then if I increase this to faster dividend growth, here I put 6% dividend growth, then look at the income here from $100 to $279. And it is also unlikely that the stock price will remain at 47. It could go to 75. Then you are not having 3,800 just from the dividend, but then also there is the boom in the stock prices that increases your returns. So that is value investing. I don't know where the stock will go. Will it go up? Will it go down? It has already crashed, and now because we watch the price, we follow stocks as I'm showing on my research platform. When those stocks hit our interesting situation, then we start putting them into the portfolios. And keep in mind, if the stock goes lower here for whatever reason, this dividend goes up, I can reinvest at lower prices, which means my ownership will be higher in the future. And I do that by having such an intrinsic value comparative table. So 5 years ago, Berkshire was very cheap, now it is expensive. 2 years ago, Archer Daniel Midlands was expensive, now it looks cheaper. Of course, this is the public one. You can download it in the link in the description below on my free value investing course. And the goal is to avoid these negative returns by restructuring, rebalancing the portfolio across the value, and then constantly compound at a good rate. My goal is 10 to 15% returns from the businesses. So yes, maybe I will perform equally to the market in those market bubbles, but I will also avoid the terrible returns when it comes to market craziness. So that is value investing. Tomorrow we'll dig deeper into Amsterdam Commodities and Archer Daniel Midlands as two stocks to buy of the 15 ideas that I have on my research platform. Thanks for watching. See you tomorrow.